Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is August 4th, 2013 edition of Market Outlook. Don't forget to sign up for our free newsletter and this video by going to the website www.marketgauge.com, and you get this free every week. So, interesting. We're going to get into the markets here. We're going to focus on the SPYs, the volatility index, the market indicators, take a look at the bonds and the gold miners, because that might be giving us a bit of a cue as to where the gold market might be heading. So without further ado, we're going to get into where we are in the spiders. First thing you can see, moved out to new highs. We're going to look at the um, daily chart. As you can see, we're starting to get up into the higher regions on the RSI, and we're hitting 97. So that's what we consider pretty much the overbought zone. And at the same time, closing on all-time new highs. So really great response to the employment report, even though it was sort of muddied at first. But can't argue with this type of price action. Again, we want to be very concerned with a close under about 167. Let's get that number a little bit more precise. Any closing basis, certainly under the 168 level, would take out several weeks of data and be relatively significant. Plus, we also have closed obviously on new highs, so we're going to be keen as we're overbought to see a potential key reversal pattern or a slingshot pattern. But meanwhile, the tape is still telling us there's more room to run. Volume was relatively light, not to be surprised because volume, summer doldrums type activity, so lighter than expected volume. Can't read too much into that at this point. Let's take a look at the weekly charts as well. In the spiders, you can see we're not quite at the upper end of this channel here, so there's quite a bit more room to run on the upside. You're talking potentially about the 173 area for this coming week, even up to 174, without even penetrating the upper end of this channel right here. Okay, getting right down to the market internals, VIX. One of our concerns is irrational exuberance, to borrow a phrase from Alan Greenspan. And what does that irrational exuberance look like? Well, it looks like this chart right here. What is this? This is VIX.X, which is a great sentiment indicator. It's the CBOE Volatility Cash Index. You can't trade this one, but it's a really good leading indicator. And as you can see, we hit the bottom of the lower end of the Bollinger Band. And as you can see, the last time we did something like that, within a couple of weeks, you had this pretty substantial sell-off in the market, causing a rise in rates. So it doesn't always happen. Sometimes it touches down, and you get sort of this mild sort of drift up, but definitely cautionary here, as there's some fairly extreme frothiness. Let's take a look at the market indicators, the market internals. McClellan oscillator, where are we? You can see our intermediate, looking out 1 to 3 weeks. We got the sell signal. We started talking about how we can move sideways, and that's really a sign of a bullish market. As the market internals actually sort of worked off this overbought condition and what we would traditionally call a sell signal, we've actually gone sideways for a while and moved up. That's usually a sign of a positive market. Now, we haven't played it out completely yet, so again, let's watch the tape, the price action, and definitely keeping an eye on the exit doors, because anything can happen here, especially as we get and take a look at the bonds as well, because interest rates, and especially accelerating higher rates, is definitely something of concern. Taking a look at the shorter term data, advanced declines, you can see right here several days ago also generated a sell signal, along with the confirmation that it gave with the up-down volume reading. But the best, again, we can say is sideways action for now. So we're sort of just working our way, sort of moving up as the market is working off that overbought condition. That's usually an indication of the type of market we're in, which is bullish and very strong. Let's take a look at bonds interest rates. You can see on the daily chart, very interesting action. Let's take a look at the bigger perspective here. You can see we're hitting, well, actually, let's move to the weekly chart because that'll give you even a better perspective. As you can see, we hit some of the highest levels in the 20-year bond going back since 2011. And in fact, on an intra-week basis, we got to the highest level in rates since mid-2011. That goes all the way back, I think, to June or July. But by the end of the week, we closed back into the pattern, but still closed under the key 200-week moving average. So that's the that's another weak indication. Now we're still rising here, and you can see it's fighting to hold on to that critical support level. Let's take a look at what's going on the daily charts. On the daily charts, you can see the war happening here. For one, on Wednesday, we had this huge sell-off on the opening where we traded down to those all-time lows, and that price was down to 106, closed all the way up almost to 108. That was a pretty significant rally, closed on the highs. That's what we would call a potential key reversal, depending on how it resolved itself the next day, and you really want to see some follow-through. Now, what we didn't have is a capitulation volume spike. So it was a little bit more suspect. And voila, the next day, what happened? The market quickly took the economic news, the employment data, and said, you know what, that's not so bad. And in fact, it's pretty good. And the market then resumed its drop and closed on all-time lows. So that was a reversal of the reversal pattern, followed by, on Friday, a close on the highs of the day after a significant low. So you can see that there's a real war playing out, and that is going to be a real key point here in what happens with the market. Obviously, if rates hold and we get a rally here, that's going to help the stock market. Lower rates are actually going to be positive for the market. So if this is a bottoming formation, that's sort of what the spiders are telling you, the S&P is telling you, is that the way it's reading this interest rate action is that things have sort of peaked in the strength of rates rising here, and they're going to pause. But let's let the market tell us, but this is the war that's playing out. So far, the S&P is saying that rates are not going to rise much beyond these levels right here. But again, the tape in both the bonds and the S&P is going to tell the picture. Okay, one last thing before I head off for the weekend is GDX. This is the gold miners. Along with gold bullion and the big rally we've had, you can see that the gold miners have now resumed its bear phase, right? Taking a look on the daily chart, you can see that the gold miners have broken down under the 50, under the 10-day moving average, and have closed now underneath it for 2 days in a row. So if we can stay if we continue to stay under this 50, it's certainly indicating another down leg for the gold miners and the gold bullion as well, which, by the way, is just in the process of breaking down under the 50-day moving average as well. So meanwhile, the gold GLD, let's take a look at that. And you can see GLD has also broken its 50-day moving average. So you had a pretty nice run here. We have our stops in place for the gold, for the long trade we took, and we have only a small piece of the position, and that was an extremely nice play as well. So it looks like the gold market, you got 2 inside days here as well. So the next move, if you get a move, by the way, above that 50-day moving average and that spike high from 3 days ago, you could have a resumption and potentially another test up to almost the 150 area or more, or excuse me, right around there, if you can get a reverse above this 2-3 day pattern with all of those inside days. Otherwise, if we get a failure here, you're talking about potentially a test of the lows, which is a 100-point move from here, or a 10-point move, or $100 in gold bullion. Well, that's it for now. Again, don't forget to sign up. If you want to follow us in real time, get our tweets, track our real-time portfolio that is doing spectacularly well for the year, sign up for Mishra's Market Minute Premium for mini and swing trades. And if you want to do some day trading, you can sign up for that by going to our website, and it gives you a definition of those products. Well, thanks. Have a great summer weekend, and see you next week. Bye for now.